Welcome to the Low Production, High Value Show with your host, Andrew Jenkins. On the show, we'll be exploring the world of entrepreneurship, social media, and the growing digital landscape. Whether you're a seasoned entrepreneur or just starting out, you know that the world of business is constantly evolving and changing. And in today's digital age, it is more important than ever to understand how social media and technology are affecting the way we do business. That's why on this show, we'll be talking to entrepreneurs and experts who have a wealth of knowledge and experience to share with you. From the latest trends and technologies to the struggles and triumphs of running a business, we'll be covering it all. So if you're looking to level up your entrepreneurial game and become more digitally savvy, then let's get started with the Low Production, High Value Show.
Welcome to the latest episode, and today's guest is Ton Dobbe, who's a value inspiration, a B2B SaaS specialist or expert. Welcome to the show.
Thank you very much, Andrew. Pleasure to be here.
Great to have you. So it'll be 6 years and soon be a 6-year anniversary since the creation or the founding of Value Inspiration.
Yeah.
Given your focus on B2B SaaS, how has the SaaS world changed, if at all, from your perspective, from 6 years ago to now?
Yeah, well, I mean, my first reaction would be that it's mainstream now. I don't see any company anymore that starts a software company that doesn't apply the principles of software as a service to their business. And that was a couple of years ago. It was getting there. It wasn't there yet. What I also seen, like 6 years, it's funny enough how long it has actually taken and how much has actually happened in that time. Because what we of course seen, maybe it is even broader and mainstream, is how the whole funding world has completely changed with the economic crisis and COVID, and whereby 6 years ago, if you had an idea and you could sell it to a VC, you get funding for it and you get going. Where these days, the first thing they say, okay, well, we believe in your idea, just believe in it yourself, get it going, and once you get the result, then come back. Because the whole thing around risk and so is completely down the drain.
They're looking for something market tested or market validated?
Yeah, I mean, they don't want to risk more money in that. Another thing is also, I mean, I come from the world of, when I was still working at Unit 4 prior to starting my own company, Value Inspiration, came from a company that had been in business for 30, 40 years. So we've been through all these technology waves, and there was still technology in there that was sort of evolving from an on-premise world to a software as a service world.
Yes.
And I think up to 6 years ago, you could get away with that, yes, you're delivering it as a service, but these days, with how fast the promise of cloud is, and not only about that the infrastructure is there, but all the other components, the data is now there. AI is really, really grown up. You can start a SaaS business so quickly and so easy. If you got an idea, you just get the infrastructure. You take a subscription for that, and then you're off. You can start building. Like what makes you really. So, talking about fake SaaS, like the ones that came from the old world that pretend to be in the new world. That is, you can't get away with that anymore because people just have grown up and they just figure you out. I think that these are
I worked for an e-commerce software company from 1997 through to 2000, and it was a client server. You installed it physically on a computer, you installed it physically on a server, and your client application communicated with the server instance as well.
Yeah.
And then they're no longer with us, but Compact Computing invested in the company and said, we're interested in a browser-based, that's the term they used then, but or cloud-based. I don't think cloud was being used that much then. But we're looking for something that's centrally hosted.
Yeah.
And they weren't saying SaaS or anything like that. And there were ISPs were morphing to ASPs, application service providers, which was the
Exactly.
precursor to SaaS.
Yeah.
And they came to us and said, "Do you have this centrally hosted browser-based solution?" And the CEO at the time was shrewd enough to say, "Yes, we do. It's in development." Meaning, like, as soon as he got off the phone, basically, or back from the meeting, he's like, "We got to build a browser."
Exactly.
And
Exactly.
they had something mocked up like that to meet their requirements,
Exactly.
and everything. And then a new company spun out post acquisition, and everything that was the move was from client server now um, to SaaS based, and
Yeah.
that was 20 plus years ago. Terminology has changed, but
Yeah. True.
the underlying fundamentals I don't think have changed. But to your point, you couldn't posture or fake it.
Well, I mean, you can't fake it these days anymore. Those days you could. You could. It was about hosting. That was the thing. It was someone else's computer.
Yeah.
These days, integration completely different. The data volumes completely different. The AI that you can plug into that. The AI at your service and all. I mean, I've done 300 podcasts myself closely now. The number of people that approach me and say, well, we need to be on your podcast, um, and then you look into what they're doing. Complete new industries have been created because of this that you couldn't even figure out 5 years ago. So
Well, and then you have the integrations, the app ecosystems in relation. Like, just look at Salesforce for example,
yeah,
and all their integration partners.
yeah.
I sort of refer to them as the pilot fish that hang off the chin of the shark to pick up the scraps.
True.
But they exist or they thrive because of who they're
Exactly.
attached to. So,
Yeah, yeah.
well,
Exactly.
in in your journey as a strategic advisor to SaaS founders, like, what, as you've seen this evolution over the 6 years, the needs and wants of founders who've come to you, have those shifted as well, or the areas that they're
Yeah.
what they're paying attention to, their pain points?
Pain
Talk to
points
me
are
a little bit
changing. Yeah, pain
about
points
that.
are always shifting. I mean, that's not new for SaaS. It's in any business. Pain points, the customer pain points shift, and as a consequence, what you're delivering is shifting. Um, what I absolutely see is because this is it's evolving so fast. Anyone with a good idea can just bring it alive. I mean, I've actually had someone on my podcast from Builder AI. They make it. It's always like building as a service. So someone that has a good idea, even a kid, can start and build this, and then make it come alive and fulfill their dreams. So the pace by which development is done, the fact that you can almost source all the critical ingredients like infrastructure, the databases, workflow support, all of the things you could possibly think about. You can just put it all together, and then you got your basics. And then you can start building. So your go-to-market is far faster. But as a consequence, of course, is also when people pick up on your idea, there's more competition coming after you.
Yeah.
So what I differently see is a lot more pain points around the inability to stand out. And if you don't stand out in this crowded market, and it was already crowded, it's getting more crowded every single day. Yeah, then that is a death sentence almost. So
But
that's what I see a lot.
what
What
do
I
you see
also
them
see
doing to stand out, though? Is it marketing? Is it
in any
differentiation from a feature set, or
all of the above. Yeah, exactly. It's first of all understanding what makes them. Like, I mean, I'm talking always about remarkable. What makes them remarkable? So I mean, from a feature function perspective, everybody's all, I mean, in all these categories are more or less the same, but how you build your solution, yeah, that's hard to copy because one team is in San Francisco and another team is in Amsterdam. They're not in the same room. So different
yeah?
brains make solutions come alive differently, and how you solve problems, therefore, can absolutely be your differentiating factors. That's understanding one, what makes you remarkable, and then figuring out who's prepared to pay premium for that and why. That's about really understanding your ideal customer segment. That's a thing where a lot of mistakes are being made. And then it's of course about how do you then position. And a lot of companies, a lot of mistakes are being made in the last 6 years. Talking about another trend is that all of these companies went for funding. The thing they tried to blow up was a total addressable market. Like the market needs to be super big and grow super fast because then we can get some money funded into a company. But yeah, I mean, it doesn't mean that if you have a total addressable market of 15 billion growing at 35% compound average growth rate, that anyone is going to vote for you, you know? You still have to sell something. And that's where at the end, where niching comes down, like really being acknowledging that you cannot please everyone. I'm talking about it in my book as well. And nail that first, dominate that first. So that's what I see a lot, you know, help them take position in a market and do that. Another thing that's coming out that has changed maybe over the last 6 years as well, because the funding is gone, a lot of these founders have to start thinking about what if there's no more funding? You know, what if the next round won't come? So they have to be completely, they have to kind of to obtain a completely different mindset, a bootstrapped mindset, which is about, okay, our most important source of revenue is going to be customer payments. Like the most important source of funding is going to be customer revenue. And that means at the end that you focus on the right customers that are prepared to pay premium, win number one, that will become your biggest fan. They'll then start to talk about you, bring their peers, and that's how you create your flywheel. Where in the past it was grow at any cost, throw it out in the market, see what clicks, see who is buying. But what you also see, of course, yes, that works on the revenue side. It might work, and it might be noticed in the company. But then, what is it worth if like a year later, 20% has churned, 25% has churned? Like, it's not sustainable. So that is a big thing as well. How can we create a business that can grow sustainably and accelerate there? That's a big one that I see in my work.
Well, that's long been a criticism of founders were focused more on getting from round to round of investment versus this, like, let's do enough to check the boxes to appeal to investors so we get the next round. Yeah. But then, as you're describing it, well, you have to operate on the assumption that the next round may not come.
Yeah, true.
Or
so what is your runway?
For the sake of risk management, assume it isn't.
Exactly.
What are you doing to survive?
Yeah. Now, I wrote a really, really long blog, one of my essays around the vicious cycle of desperately chasing funding, which is exactly that rat race that you're talking about, because that's how it feels like. I have seen founders that close their Series A. All the messages go out on LinkedIn, no champagne, Series A. And it's like, okay, sorry guys, but you might be celebrating this, but now the hard work starts, because now your target has tripled. And today is the first day. And in a quarter, you'll have your first review. Exactly. So the better way at the end is to see how you can become, kind of move from being desperate for funding to move to a situation whereby you create almost funding freedom, whereby it's an option, not a set choice. I mean, it's fantastic, of course, when it becomes an option where people are actually recognizing these guys they got their act together. They're growing fast, they're growing sustainable, they're profitable, they know how and we want to invest in them. They come knocking on your door. That's the completely different thing.
You're right.
Yeah.
But where do you tend to find yourself helping founders? Like at what stage? Is it, and not necessarily related to funding stage, just
No.
You know, the stage of their arc or journey as a business?
Yeah. Well, I mean, it makes most sense for what I do, and I help them, like I said, with the positioning. I help them with the value proposition and like carving out the ideal segment of the market. That works at best when they have customers, when they have product market fit, but are like getting towards that invisible ceiling and not being able to break through and move to the next phase. Mm-hmm. That is the ideal part. I've worked with customers that were earlier stage, and it's so hard because product market fit. Yeah, what is it really? Like, what is the differentiating factor? What is underpinning your solution? I'm always talking about magic concepts of your solution. That when they work together, it delivers a value in such a way that it becomes incomparable to others too early.
So they need to address some fundamentals before you're engaged, right?
Exactly. Yeah. True. Yeah.
Even when
I mean,
you're engaged,
everybody has their space.
right?
I'm mentoring companies that are earlier on, but I'm mentoring them.
Right.
But where the real work comes in, really doing the hard work for them, with them, to get all these things crystal clear. It really helps when there is traction.
As part of when you're having those preliminary discussions about whether to work with a SaaS founder or not, do you try to assess whether they will listen to you?
That's a good question. A lot of them come to me because they've listened to me for months without me knowing.
Well, that's a fair point. Yeah, I can see
So
that.
they almost talk the language, and the only thing that I do is try to keep them out of it. Like, why do you think this is needed? Why now? Have you tried this? Have you tried that? And
So
only if I figure
in a
out,
sense you're testing how valid their
yeah,
concern or their
yeah,
sense of
exactly.
urgency is.
Well, that of course, but it's like, what is the real problem that you're trying to solve? And if
Hmm.
I'm not clear about the problem that I need to solve, yeah, we want to have better messaging. Yeah, for what? Initially, I mean, I had a customer called Sana Commerce in Rotterdam, where I did a complete repositioning process. And when I was talking to the CEO, he came to me and I said, so what is your problem? Well, we've been around for 10 or 11 years. We're growing quite well. They appear to be, they were, I think, around 25 million IRR, and they were growing at 35% a year. And I was like, what's your problem? Um, and he said, yeah,
Those are
but
all good problems to
I,
have.
yeah, exactly. But he was thinking ahead, and he said, what we're currently doing is not sustainable. I mean, it will go down, and we need to get a step up again. And that's what he was doing it for. So all these SaaS founders at the end have their own reasons,
Yeah.
but it needs to be something that is beyond. There needs to be, what the result of it demand change in the company. And if you're
But
only up, yeah,
I was just going to say that example you just gave speaks to them being self-aware
yeah,
and being conscious of what got us here isn't going to get us there.
And now, a word from our sponsor. Social media has become an imperative for almost every business. Discover how to successfully implement an effective social media strategy that is supported and integrated throughout every part of your organization with this essential book from our host, Andrew Jenkins. Social Media Marketing for Business, Scaling an Integrated Social Media Strategy Across Your Organization, is now available from Amazon or KoganPage.com.
exactly. Because they were seeing that was. I mean, I recently spoke to him again, and he was talking about that their main, they were selling e-commerce platform, and it's integrated into SAP or Microsoft Dynamics. And the argument was, our main buyer is getting is losing power. And we've always been very good to sell to the IT director, to the CIO, and now we have to sell it to the CEO, and we're being ghosted. And that was big. What a part of the big problem. And solving that was, kind of going out there, working with an expert, because at the end they had 400 or 500 people already on board. They had kind of a solid marketing team. They could have done it themselves, but they realized that it's like looking from the inside of a tin, trying to see what's on the outside. You can't see it. They knew they've been working, for example, with a marketing agency that didn't come from the SaaS world. And of course, these guys can do your rebranding and they can come up with a fancy message, but they don't comprehend what is making you remarkable, and why that is of value to a particular customer, and how that stands out in all this noise in the market around e-commerce platforms, Shopify, Magento, Wiz. I mean, all these platforms. So that's what we needed to fix.
Mhm. When it comes to you helping them with market fit or to test market fit,
Yeah.
Are you surveying existing clients? Are you surveying prospective clients, or sort of like a kind of a buyer survey? Like the
Well, in
example you
that
just
particular
gave,
one, I didn't. Yeah, exactly. Of course, always.
yeah,
Because I mean, what I first always do is try to get as much information in from the inside. So I speak not only to sales and marketing and to the management, but also to the product owner, to the CTO, to everybody that has an opinion, has been working with the company for long enough to give me the ingredients, and then I start to already make sense out of that. We create a long list of problems that wake their customers up at night. But then after 1 week of working together, it's okay. Now I need customers to say, based on what we've nailed out, well, the long list of things that we carved out and narrowed down. Now I want their perspective on this. Do they see the same thing? What
yeah,
are they missing? Are they using the same language? And for example, with the example on Sana, their value proposition was always we're a shortcut to e-commerce, and technically they were. It was completely right because all the other platforms out there needed to integrate into an ERP, and they were embedded in an ERP, so they didn't have to do all that stuff. They were just using all the technology that was already there, and off you go, live in a week, so to say.
yeah,
But the customers didn't buy it for that. Customers bought it for completely different reasons, and they couldn't see it. I started to connect a couple of dots from reading some case studies, seeing that these customers that they had that were with them for a long time were really, really long in business, 25 years, 50 years, 100 years. Then when I started to speak to them, they said, we don't buy them for the shortcut to e-commerce. That's only one moment. Yes, it's nice that we can get live in a week. What we buy this for is because we need our customers buy from us because of reliability. We are coming from the old world where we have a store and people come to our store to buy things. And now our customers want convenience to buy in the cloud, to buy through an e-commerce website. These things need to be one-on-one. Buy anything on the market, you don't get one-on-one. This is B2B. Every customer has different agreements with us. And as a consequence, things go wrong in that process. So when a customer sees a pallet of stones and they want to have 5 to be delivered tomorrow at 4, they buy them, but anticipating that it will come tomorrow at 4, because that's when it arrives, then they can actually finish the job with their team, which is margin. And then there's only 3 or 2 that come because the others were already picked by some other customer, but it wasn't updated on the website. So do that one time, okay. We do it twice, but then you lose your customer.
yeah.
So it was a completely different problem that we're actually solving. And that's, of course, that is what I always try to do, is looking at the whole thing from the outside in. What is this for the customer? I couldn't care less that you got AI or that you have native APIs into an ERP. What does that mean?
And the customer's probably never going to touch it.
Exactly. No, but the fact that you build it differently, although you have exactly the same functionality as all the others, you build it differently, you had a different approach to solve the same problem, that's of value. Then you can stand out.
Well, I remember, so my first foray into technology was starting my own e-commerce company selling menswear on the internet
Yeah.
in 1995.
Oh, really?
So your point is, like, the founder, I had to go find someone who could give me a merchant account. Well, first I had to find a service that would do credit card transactions, which there were nearly none then.
Yeah.
Find a cooperative bank or an intermediary to give me a merchant account. And then I had to build a website from scratch that had a catalog and could handle size variables and all that stuff.
Yeah.
I had to cobble together my solution.
True.
Fast forward to today, and I just saw a post on Threads. Someone said he was the VP, or he's the president of Shopify. You can conceive of an idea, launch your Shopify store the same day, and be live by end of business.
Exactly.
Because
that's how fast it goes.
Well, and Shopify has, again, I don't care how it works on the back end, but Shopify's value proposition has been, they have covered off all the pieces I used to have to cobble together myself.
Exactly. And that's why you give an example around e-commerce, how simple it is for someone that wants to start selling online, which it is so simple. But all of the other ingredients are also available as a service to a B2B SaaS founder to accelerate that whole process of starting first. I remember the time at Unit 4 where I had a debate with one of the developers around a printer driver for an Epson Matrix printer.
You're
You don't even.
bringing back awful memories.
But that was the level of detail you have to kind of develop at that point in time. Not anymore.
I want to jump back to something you were saying earlier about when I asked you about whether founders listen to you or not, and they said they've been listening to me for months through your podcast, through your newsletter, and so on.
Yeah.
I'm curious to hear from you what those consistent activities have meant to your business, like what you hear from founders. Do they blatantly say, I've been listening to your podcast and you said something that triggered my reaching out to you? Like, talk to me about sort of that experience and the value that they've meant to you.
It's I mean, what I always see, and that's also my experience with the whole social these days. There's many more listeners and lurkers than there are people that are actually kind of giving you something back. But when you then speak to them, and you just kind of bring up the subject, or they say, now do I speak to you? Then it comes. It's funny. My question is like, why didn't you say this before? Why didn't you ask before? But it's easier to not. But I mean, I started my podcast back in 2018. I think the first went live in the first week of January or so. And for me, it was an experiment. I realized I came from a company that had 4,000 employees. We had Gartner contracts, IDC contracts, Forrester contracts. I mean, all the information was available. Now I was on my own, and I needed to do research. So that's how it started. And I was like, okay, I want to do research about what's going on in the industry, in the SaaS world, and why not interview SaaS founders that are at the edge of it. So I was handpicking people that I wanted to interview. And they were typically always around technology that was augmenting people. So the whole story of what value can we deliver around when technology and people blend in the right way. Not that much interested in automating people out of a job. I'm actually more interested in what can the two do together that we have never been able to do before. That's how that started. And then I did 10, and then I did 20. And suddenly, for me, it was a very good way, I realized after about a year or so, to build up a very nice relationship with people. Because first of all, you invite them to your podcast, you get an hour to speak with them, so you build up the relationship by giving and giving. And at some point, you stay in touch. And that's how relationships are built. In that same year, I also started my, you call it newsletter. I actually hate the word newsletter. Nobody wants a newsletter. And I think at that point in time, I called it my musing. And I was inspired by Tim Ferriss, 5 Bullets on Friday. I called it Value Inspiration on Friday. And that's how I informed them about one particular idea that I had that week. And I was putting in a couple of other links to the podcast, for example, that I did. It was always something else. Mm-hmm. That was typically how I went to market. And then I think about a year ago, there's been going on a regular basis, one blog a week, one podcast a week, and the newsletter, the musing. And last year I did an initiative called Brand30.io with Andrew Mewbank. And I was already receiving a number of daily emails from people that I respect and got a lot of value from it. And at that point in time, I was, maybe this is the time for me to start doing that as well. And initially, I asked my audience. It had been growing steadily over time because of the, I don't sell in my newsletter. I just give value. And it's for me, it's about sharing, the experiences from people that I have had on podcast, from people that I got in my mastermind, from my own experience and so on, and just share it. Because I'm sort of on a mission for more SaaS companies to stand out in the market and to build a sustainable business. Because what I saw when I started my business was that 90% of SaaS startups or startups fail, and I don't think that's a good idea. But was more even striking to me that 75% of scale-ups fail. And these companies have actually been through a longer cycle. They got product market fit, they got customers. 75% still fails. And for reasons that I don't think are necessary. It's always, it's in many cases, it's fundamental things that everybody can get right. That's what I write about all the time. So long story short there, I got 50 people to say, yeah, I want your daily. And then after about 6 or 7 weeks, I was like, okay, now I got 2 groups, a daily group and a weekly group. And I asked people in my crowd, in my network, my tribe, what would you do? And a couple of people that had a daily as well, and they said, move them all over, you know. And I was really literally on that particular Friday, hiding under my desk, awaiting people shouting at me like, what are you doing to me? Like one email a day, you're crazy, but nothing like that. People started to kind of give me back, and like because the whole thing at the end with the daily writing is you get sharper and sharper and sharper. And people literally write me emails saying, you got a camera in my office? Because this is literally what we talked about yesterday. It's almost frightening. But that's, you know, if you know your niche, if you're embracing that the whole day, and you keep your listening ear out for what's going on and what is the concerns and what are the frustrations, and you write about that, you start to resonate.
Well, I think
that's, I think, is the beauty of it.
Well, I think your differentiator or the unique is your agenda is to be helpful and to deliver value.
Yeah.
And you're doing it daily. If you were pitching me daily,
no,
that's an entirely different proposition. And to your point, people are saying, have you got a camera in my office? Because you are, you know, they are flagging the value that you are providing through insights.
Exactly.
And you're doing it.
And of course, I had unsubscribers after going daily. No doubt about it. But then when I look at that list, it's like, wait a minute. These people have unsubscribed this week, 5, 10, whatever. The beginning was maybe a little bit more. But these people would never buy from me. So my list was just getting better and better and better. At the moment, I moved, I think, from an open rate of around 18%. I'm now far into the 30s every single day. And I'm not done with pruning my list. But it's a natural process.
Yeah. It's sort of 2 steps forward, 1 step back. But
exactly. Yeah, true.
You'd rather talk.
And if it's not for you, it's not for you. I mean, I'm not kind of bribing people to get into my list, you know. If it's a value, fantastic. And if it's not,
have 100 people that love your content as opposed to 2,000 that are in
exactly.
Or to your point, the 30% that are opening it versus the 70 that aren't. So
exactly, yeah, that's true.
You talk about someone saying, you were just talking about this in the office today. What are founders talking about, especially around there's, you know, tech layoffs? So a lot of the more legacy ones hired up. They netted out. They still have hired more employees than they laid off.
Yeah, true.
But recession, retraction for funding, layoffs. What are they talking about as they try to navigate? What are they, you know, probing you?
Yeah, of course. I mean, it's always. I mean, and I remember that so well. Also, from my time at Unit 4, we were a stock listed company, IPO'd in '98, I think. And you know, when the revenue stays behind, the costs have to be aligned with that. You know, the cost it needs to be balanced. So my boss was always saying, Ton, I know we have to focus on the long term, but the long term is about a lot of short terms. And he's so right with that, you know. The fact is at the end that, companies that survive, I mean, whether there's an economic crisis, whether there's COVID going on, whether you're in this vertical or that vertical, some people will starve and they will at the end, they will die, but others with the same solution will thrive.
Mm-hmm.
I mean, I had the CEO of, I'm actually working on that podcast right now, the CEO of a company called Boulevard on my podcast, Matt Dana. During COVID, they could have died because what their business was hair salons and spas. I mean, talking about COVID, closed.
Wow.
Yeah, they
A
grew.
business you wouldn't want to be in during that
Yeah,
time.
and of course, the beginning was really really tough, but they were really flexible with the customers. Tried to help the customers stay alive as well. So they didn't see hardly any companies that canceled their subscription. What they also kept doing was to start to develop for the pain points that were new by then. What they also saw is that a number of competitors weren't doing that, and they were, still, we're good where we are. So at the end, they created a campaign, and they started to kind of build a number of functionalities to migrate from those competitors to them. So they actually gained 600 customers during COVID, I think in 1.5 years, which was far more than they would normally achieve in a year. In a market that was physically closed. So I tell you, it's like there's always opportunities. In my book, I'm talking about like a triangle.
Well, I wanted to ask you about that to explain the framework.
Yeah, the framework. Yeah, well, it's part of the framework. It's not the whole framework, but
Okay.
this is part of what I call the foundational framework. In my book, I'm talking about 3 phases to grow remarkable traction.
Mhm.
The first one is the traction foundation. Second, once you fix that, which is all about what is the value that your business is really all about, and how do you bring that to customers? Clarifying who's prepared to pay premium for that, what makes you remarkable, the things I talked about earlier on. Once you got that fixed, you can then start to work on traction momentum, which is the marketing side, demand creation rather than just capturing. On the sales side, shortening deal cycles, increasing win rates, increasing deal value based on that foundational thing. And then, of course, there's also the portion of, it's not only that you start to create that traction, but at some point it will stop again. That example that I gave earlier on, that was that the CEO of Sana was afraid of. It's about traction resilience. That's another angle of the book that I'm talking about. How do you keep the resourcefulness in the business to be prepared for what's coming next? Going back all the way to the foundational part, a big portion of that is really getting a clear understanding, not only about what is your ideal customer and and who is not, like who you're for and who you're not for. Because a lot of companies make the big mistake that they define their ideal customers, they call it, but the only thing they define is what are the boundaries of the market we find them in. Okay, it's in professional services, companies between 500 and 2,500 people, in the US, in Canada, and in the UK. Well, that's like the big fishing pond. But 80% of those market will never buy from you. So there's 80% waste. You want to focus on the 20% that's going to buy from you no matter what. Because if you focus on those 20%, your win rate will be 80%. Rather than if you focus on that large market, you'll have very, very low win rate as well. That's at the NDR there. Once you understand that, really, that's also why I'm saying you need to have customers in order to do a project that is going to be valuable. Because I'm going to ask you in the first session, put your customers into buckets. Which are the customers that you get a lot of energy from, where you deliver your best work, your biggest fans, when you meet them, it's always energy. They complete your sentences, that kind of feeling. And where are the customers where it's always like, dread it, I have to go to those guys again, always moaning. They bought your solution hoping it would do something for them, but at the end they bought something that didn't. That doesn't meet expectations. So that's one thing. But then the second thing comes. That's about what are the pain points you solve, and that's what I'm talking about, a triangle. And Jonathan Stark on this podcast called it the broken triangle. If you get it wrong, triangle has 3 legs and they need to be balanced, equally strength. So what you want is to build a long list of problems that keeps your customers up at night. And once you know your ideal customers, those problems are likely different from the ones that are not your ideal customers. That's a different thing there. And then for each problem, you answer 3 questions, which are the 3 legs of the diagram or the triangle. On a scale of 1 to 10, how valuable is this to solve for your customer? And you want to focus on the 8s and the 9s. And the second question is, on a scale of 1 to 10, how critical is this problem to solve for your customer? And again, you want to focus on the 8s and 9s. Because once something is valuable, not critical, it's a nice to have. I mean, When there's the next project coming up, in a crisis is kicking in, budgets are being cut, you're the first out. So you want to have something mission critical, valuable, critical. So that's one thing. And then the last question to answer is, okay, which of those problems can we, with our solution, exceed expectations like no one else? Because if you can't, your competitors will also focus on those problems and they'll just blow you out of the market. What you want is to figure out, okay, where can you create that space where you can be on your own? That's how you then position yourself around, and how you create your value proposition, everything aligns. You become the magnet for the right customers.
Well, and to your point, to be exceptional.
Yeah, exactly. Remarkable.
Remarkable as a competitive advantage.
Yeah.
Well, where do you see with founders? You sort of touched on this when you referenced your time at Unit 4. It's all well and good to have long-term goals, but sometimes the financial decisions are based on short-term circumstances.
Exactly.
Can a founder have a 3-year plan in B2B SaaS?
Depends. The 3 years is a very long. It's like ages these days in the SaaS world. I mean, and there were not a lot of people talking about ChatGPT 3 years ago.
True.
Everybody, I mean, even my mother is talking about it, hasn't got a clue what it is.
Well, do you tend to work with founders on like a quarterly?
No, I mean, they have an out. I mean, of course, they got their understanding of the runway. Is it 3 weeks, 3 months, or is it like 24 months, whatever? So that is their outlook. But yeah, the way they develop as well, they have sprints of a couple of weeks, and what they commit to is 3 months max, because they want to kind of keep the flexibility going in. I mean, in the past, first of all, Unit 4 was a company that IPO'd, and we had to deliver EBITDA increase every single quarter. So you become short-term focused.
Mm-hmm.
We were also in a world where there was no SaaS. It was in those time. It was majority was on premise. You had releases that were taking 2 years. Yeah, unthinkable these days. You update every day and you release every month, and so the whole world has changed. So 3 years, think 3 years ahead. No one does that, but your vision can be 3 years out.
Right.
Like, what is that North Star? What is the big change that you try to create in the world? And how are we going to get there? And then, okay, some people, I mean, there's technology that is going to help you here. And it might be that 3 years ago, your journey was going like this, and you weren't considering generative AI in that journey. But today, it's like, yeah, wait a minute. We can actually get there faster, 6 months, by leveraging it and embedding it in a way that means value to our customers. So yeah, what are the opportunities? Just keep an eye open for that.
Well, to your point, the vision might be 3 years.
Yeah,
but
exactly.
the time frame that you're focused on for anything related to execution feels a lot closer.
Yeah, 3 months, 6 months, and so on. Yeah.
Well, as we come to a close, I wanted to sort of jump back to your book, and having written a book myself, and this isn't about me, but just once it's written, it's submitted. Has there been anything that's come to mind that if you could go back and add to the book, as well, generative AI as an example? Is there anything that you would want to incorporate into the book if you had the chance to do so?
Good question. I wrote a book in a way that it's an evergreen. The principles that I'm talking about should be still relevant in 10 years and 20 years from now. I mean, what I would change right now is possibly a couple of the anecdotes that are in the book. I mean, it's loaded with case studies from people that I know, that were on my podcast, transcripted quotes from the podcast. Funny enough, they were all talking about, the majority were talking about AI already at that point in time, 6 years ago. Mm-hmm. It was around augmentation. which I think is also what these days with generative AI and with chat GPTs, the power is in the augmentation of people. So you won't be automated, or you won't be losing your job because of AI, but you will be losing your job to someone that masters it and leverage it to his or her advantage. I'm not that's maybe the only thing I would adjust. Although I'm not even talking at length in detail about how or the underlying principles of the technology there. I was more talking about the principles of the business and the business ideas and the what choices that made to go to market and why. And examples of not going for a market where they could address 90% of a particular area, but they deliberately went to market where it was only 10% of the bigger thing. Why, And these are valuable lessons because they're sort of counterintuitive, but super valuable. And these things are at the end, time agnostic.
Well, I think to your point, it's a good reminder that the fundamentals of business still apply.
Exactly.
And that there are. So we've gone from, I'll call it on-premise or client server to SaaS, cloud, what have you.
Yeah.
But to use your example from Unit 4, EBITDA is still EBITDA, right?
Exactly. Nothing nothing changed around that point.
That's still the
Business
metric.
still needs to make a profit in order to sustain.
Yeah, and that's still the metric that everyone talks about. So, and it's the metric, one of the metrics by which investment will be assessed.
Exactly. Yeah. There's more metrics these days, but these are still fundamental ones as well. Yeah. I mean, for 6 years, 6 years ago, yes, but 20 years ago, beginning of the century, no one was talking about NRR, ARR. Like, what are you talking about?
Yeah, but that still rolls up to revenue, profitability, EBITDA.
True.
It's just and even the influence of SaaS to service providers who move away from projects, to move away from hourly to retainer based and so on, to remove the volatility.
Exactly.
And to shift towards predictability from a revenue standpoint.
Yeah.
But similar to SaaS, that means, instead of getting $50,000 up front for a project, I'm getting 4,000 and change over every month for a year.
Exactly.
And the implications. So anyway, this has been fantastic.
I think it has always the world has at the end become a better world because in the on-premise world, when we sold a deal, our flags went up and the customer was like, okay, now we have to start working on this. And of course with SaaS it's the other way around, customers saying, okay, now deliver it. And if you don't deliver well, I'll churn. And that's of course with a grain of salt. How do you say that? Yeah.
But it's more empowered. The customer or the consumer is more empowered.
Empowered. It's more about the value delivery. And if it's not good, customers go away. And of course, with enterprise software, that's a little bit harder because it is still a project. But with other SaaS tools that we have all around us, I mean, if I want to change from this solution to another solution, tough job. I'm going to do it this weekend.
That's right. Well, and customers talk. Or they go to forums and say who's implemented solution XYZ.
That's a big one as well. The transparency around that with platforms like G2 Crowd, which wasn't available 6-7 years ago, and Trust Radius and these type of platforms, where for enterprise software, people are actually making their remark about what it's really all about, and people go there first when they are making their short list or their long list.
Hey, if it's my neck on the line for an investment,
exactly.
Yeah, amazing.
And big companies had to learn that. I mean, I remember. No, I won't name them. It was like a very large software vendor from Germany that I used to do some work for.
What does it rhyme with?
but to that point, like that was in the early days of my solo entrepreneur career, and I did some work for them. And one of the things was also to help them out with getting the like the overview of where to put their attention when it comes to the review platforms. Gartner what is peer review, Peer Insights, Capterra, G2 Crowd, and so on.
Hmm.
And I mean, when I was at Unit 4, companies like NetSuite,
Hmm.
big competitor, they had hundreds and hundreds of people with reviews there. And we couldn't understand how they were doing it. But they were really paying attention to it because they understood that game. Because that's how people buy in the SaaS world. When I was doing, for example, that project at SAP and with their solution S4HANA, they started with about 29 reviews for a company like, well, I named the name, but but of course they've changed that dramatically because it has become so important. So all of these things, how people buy, how people build, how people go to market, I mean, everything has changed at the end for the better. It's more transparent about what's really going on, and I think that's a good thing.
Well, and hopefully it'll continue.
You can't fool anybody anymore.
Right, and hopefully it'll continue to evolve. So from a consumer, empowerment, from a transparency, and everything in between.
Exactly.
Well, listen, I want to thank you for your time. I really enjoyed this and appreciate the insight. And it was a bit of a journey down memory lane for me from a software background point of view. So,
well, it was a pleasure to be there.
Much appreciated.
Thank you for joining us on this episode of the Low Production High Value Show. Be sure to give us a rating and subscribe to make sure you never miss an episode. Don't forget to check out Volterra at volterradigital.com to learn more about how they can support your social media marketing.